Right. Welcome back to Return on Podcast, where we talk about the experiences, obsessions, and habits of the most successful e-commerce entrepreneurs. I'm your host, Tyler Jefcoat, and I want to welcome you to this episode of ROP. Guys, this is going to be an interesting discussion. I'm excited to bring in a friend of mine. I've known Alex Oxford for 5 years. Another one of these stories where we built our companies literally within a couple of weeks of each other. Started back in 2018. Me on the kind of accounting, bookkeeping, CFO side, Alex on the sales tax front. So you think about this. His company was cresting just as that seminal Wayfair Supreme Court ruling came down in the middle of 2018. Everyone was in panic mode. And our go-to partner for making sure that these sellers, entrepreneurs, our clients, our friends in the space knew exactly how to handle the state sales tax debacle that has been going on for the past 5.5 years. Our resource has been Alex's team at the Tax Valet. And so in today's interview, I'm going to get in it with Alex. Let's figure out what it is that we need to be worried about, that needs to have our attention when it comes to sales tax, and what doesn't need to have our attention. What should we forget about and not waste any more energy on? And so we'll talk about what's made him successful as he scaled his business. Again, we are going to get into the technical nitty-gritty of sales tax for just a little bit. And, to be honest with you guys, you're going to want to just hire him as soon as you guys are large enough to have that problem. But I think you're going to enjoy this discussion. Thank you again for joining me today for ROP. Yeah, again, whether it's on the podcast players or on YouTube, do me a favor, guys. It really does help me if you would like and subscribe to this feed. Trying to get better at creating content. Would love to get your feedback. But without further ado, let's dive into today's discussion. It's time to maximize profitability and cash flow. It's time to learn habits and hacks from the best e-com CEOs. It's time for Return on Podcast with me, Tyler Jefcoat. All right. Hey, listen, guys, really excited to have you with me today on the Return on Podcast feed here. I just want to invite my friend Alex Oxford from the Tax Valet into the show. Alex, how are you doing today, man?
I'm doing quite well. Super excited to talk about everyone's favorite topic, sales tax, and some other things too.
It's going to be so good. Yeah, guys, before you hit skip to the next episode and whatever feed you're listening to, I know what you're thinking. You're thinking, oh shit, this is the CEO of an accounting firm talking to the CEO of a sales tax firm, or actually you've moved into more of a visionary role here, but this couldn't be good. I just want to say, guys, hang with us. This is actually going to be really good. We're going to talk about how to build growth dynamics into your business. Guess what? Sales tax does matter. Accounting does matter. We're going to talk about that too. So Alex, you and I were trying to figure out when we had last spoken, and we were hoping that it's been since the beginning of the pandemic. I think it probably has, but it's really good to get to spend some time with you. Before we dive into the technical nitty gritty of sales tax and the world that you and I play in, listen, dude, I'm kind of an ish Atlanta guy. You went to Georgia Tech, you had corporate jobs, and at some point you decided, I guess you couldn't play nice with others and you had to start a business. Like what happened, dude? How'd you pivot into entrepreneurship?
Yeah, I couldn't play nicely with others. I mean, that's like the understatement of the year. But yeah, it's kind of an interesting story. So I began my professional career in the tax software space. And so I was working for a wonderful company called Ship Compliant that dealt with excise tax for the beverage alcohol industry. And we really tapped out of that market. So we launched a second line of business called Taxify, which was sales tax software for e-commerce. And I was put in charge of product marketing. So when I had joined this company, I think it was like 30 employees. We had grown to like 60. And then we were acquired by Sovos Compliance, which is one of the big sales tax software players. And then overnight, we were at 500 and then grew over just like a year and a half or so to something like 2,000 employees. So you can imagine going from 30 employees to 2,000 employees. It was a huge, huge culture shift. Well, at the same time, I was going through some health difficulties, starting my own sort of health journey. I had kind of a freak neck injury, which had me end up at the emergency room. I got a CT scan of my neck and they found brain cancer and thyroid cancer totally on accident, right?
Wow.
And around that same time, because I was getting really sick and tired of the enterprise work dynamic, I was actually moonlighting, doing marketing for this really cool startup that was in the pet technology space. And, with that cancer diagnosis, I went back to the founder and said, like, you really need someone to be doing your marketing full time. And I just can't do it because I'm going to be recovering from surgery and I'm really just going to have limited energy. And I just need to be focused on my day job because I can't put that at risk. And I remember I was actually in the recovery room from my first brain surgery, and uh, Leo, my former CEO, said, "How about we just hired you? What if we just hired you?" And I said, "Yeah, great. When can I start?" He's like, "How about in 2 weeks?" So I actually moved across the country. Oh, sorry, this was my second brain surgery, not my first one. It's one of
By
the
the
things
way,
that
I lose
happened.
track of my brain surgeries also, so it's no big deal. It's just one of those things that, the first, second, third. I mean, come on. I'm just grateful you're doing well now, buddy.
Yeah. Thankfully, there's only been two. That's one of the things. You're missing part of your brain. You forget things occasionally. Um, but he was like, "How about in 2 weeks?" I was like, "Great." So 2 weeks after my second brain surgery, I was moving across the country from Colorado to Southern California to run marketing for this pet technology startup. It was consumer hardware in the e-commerce space. I'd never done anything like that before. And it was a wonderful, crazy ride, hellish at times. Um, we sold out of inventory. We couldn't finance the next batch of units to be created. And this is when I learned why they called hardware hard. It's because it's really hard, especially if you're in a totally new product segment and you need millions of dollars in order to make a batch of units. So we ended up shutting that company down. Well, for the most part, technically the company still exists and they're actually a client of ours. If you've ever heard of Fluent Pet, those buttons where dogs are pressing them with their nose and they're like
Yeah.
saying words. That's Clever Pet eventually became Fluent Pet, and they're doing quite successful right now. They're doing great. Um, so closed that company down and was out of a job. And I was like, well, what do I do next? So I moved back to Colorado, and I always knew from my time in the sales tax software space that there was this huge gap because I was put in charge of product marketing. I was working with the product team, the marketing team, the sales team to try to grow Taxify, the e-commerce sales tax software line of business. And I knew that there is a huge problem with businesses that wanted to buy software to have their problem go away, but none of the software actually helped solve the sales tax problem. It was just like a tool. It's like if you got QuickBooks, you wouldn't expect that you wouldn't need a bookkeeper, but that's what so many businesses were doing. They were buying the software and then just expecting everything to be managed for them. During my time at Sovos with Taxify, I had tried to find a sales tax software company that we could partner with to provide professional services alongside the software so that we could actually deliver on that promise. And I couldn't find anyone. And I knew that this was a problem. And I also knew, so this was the beginning of 2018, I also knew that the Wayfair case was working its way through the Supreme Court. So if I started a company right then, it would be the best timing ever if the Wayfair decision landed in my favor, or I guess against the favor of most businesses, because Wayfair totally screwed everything up. And for those who don't know, is the Wayfair Supreme Court case that created this concept of economic nexus, where even if you don't have a physical presence in a state, you now could have a sales tax responsibility just by crossing certain really ridiculously low sales thresholds. So I told my partner at the time, I'm going to try to get a job, but I'm also going to start this business. And if I get a client before I get a job, then I'm just going to run with it. And I think it was literally day three. I had a client, and the rest is kind of history, so to speak.
What an amazing journey. So I was looking at your LinkedIn profile, and I think it was pretty close to the same time. So I finished this sale of my first business. Literally, it was January 31st of 2018 was the close date, which is kind of another way of getting canned. I mean, I got a little bit of money, but it was like, now I'm unemployed, and then started seller accountant in February of 2018 as well. So yeah, your timing could not have been better, Alex, for, getting into the space for sales tax. Way to go, man. By the way, for those of you guys that have not met Alex, like we have a lot of friends. You and I both have a lot of friends that are kind of in this space. It's like it's a shockingly small universe, when you think about ecom brands and the entrepreneurs that are trying to make this space go. But Man, you're one of the good guys, and I'm pretty sure we've never actually met in person, even though we tour the same shows and stuff. But it's yeah, it's really great to have you on the show today, and I'm like proud. Honestly, I'm like, as a friend, I'm like, wow, this is awesome. This has been a great ride for you over the last, gosh, it's been 5.5 years now, right? I mean, it's unbelievable. So how has your role transitioned here recently? I want to talk about sales tech. We're going to get into the weeds of sales tax a little bit because there's a few things that Alex needs to update you on. But I just want to this journey is so fascinating for me. Like what has it looked like for you to transition from like scrub founder to, oh crap, we have a business, to, oh, now I get to kind of be the visionary? Like, what has that felt like for you over the last year?
Yeah, that's a great question, and I'd say I'm definitely in the middle of it and still figuring it out in many ways. But I guess I kind of look at my roles within my company as having three kind of phases. There was the wannabe CEO stage, there was the CEO stage, and now there's the visionary marketing brand ambassador phase. So wannabe CEO, I would say this is when we were probably 1 to 10 employees. And this is when I was doing everything. I was doing sales, I was doing marketing, I was doing new client onboarding, filings, permit registrations, customer support. I mean, you name it. Anyone who started a business has been there.
Yep.
And it wasn't until we started scaling beyond 10, and I would say it was really like 10 to maybe like 40 employees, that's when I really started to come into my own and really understand what does it mean to be a CEO. And lately, though, I actually stepped down from the CEO of Tax Valley about 6 months ago to free up room to go to grad school. So I actually have my first classes this week, and that has been a 2-year process, which a lot of people don't realize. Like, I actually started the transition, and we started planning and talking about me transitioning out of the CEO role 2 years ago. So it's taken a long time, but it's been totally worth it. Um, and so now I'm really focused on marketing and growth. I'm only going to be able to work 2 days a week. I'm also doing a lot of external public facing stuff like this, and I don't know how it's going to go. So I'm feeling a little bit of groundlessness. I'm kind of walking into the dark, not knowing exactly how things are going to work out, but trusting myself and knowing that it will one way or another. We'll just see how bumpy of a ride it is. But that's kind of where I like to live. I think I get really bored, and I think a lot of entrepreneurs get bored if they're doing the same thing every single day. And I think with Tax Valet, the great news is that the ongoing operations, we have everything so dialed in and so systematic with our systems and processes that it's just kind of boring for me. And I like doing new stuff. I like creating new stuff. And for any entrepreneur out there, I think they get bored and they get complacent pretty quickly. So hence why I'm going to grad school, hence why I'm transitioning to this new role. Yeah.
No, I think that's really good. I've had a couple of moments. It sounds like you can probably empathize with this, but it was about, I don't know, it was like 2.5, 3 years ago, where all of a sudden seller accountant, like nothing was on fire for the first time. And it was actually, there was kind of a grieving process for me as the founder to be like, do I have any worth anymore? What are we going to do? Like nothing's broken. I can't like cowboy up 3 times a week and fix something that's a complete disaster. And so I think it sounds like you've kind of come through that and had to shake up your rhythm a little bit, to continue to like pursue meaning in what you do. It isn't just about turning the crank. It's about pursuing significance in your life. And so, yeah, dude,
Well,
that's great.
I mean, I went through my own journey and self-exploration with that as well. Um, I I think that every entrepreneur, every CEO, or at least this is what the research says, the vast majority of CEOs and founders had some sort of trauma in early childhood, right? And somehow our brains equate working with self-worth and seeing the results of our actions and our impact as creating some sort of validation for us. So it's taken a lot of therapy and many years, but I went through my own transition of disconnecting those two and saying, if I'm not my work, if I'm not my business, then who am I? And I think that that's a lifelong journey and exploration. And the answer is, I'm still figuring it out like so many others, but I can tell you that I'm not just my work. And it was a lot healthier for me to disconnect my self-perceived value from the work that I do. And I think that some entrepreneurs, when I've talked about this with them, they get this fear of like, well, what if that means that I just don't care about my business so much? It's like, no, it doesn't work. It's not going to work that way. It's not like your business is just going to go away because now you've got like an actual healthy self-esteem. It means you're going to come into contact with your business and the people in your business in a much healthier way.
Yeah, I love it. I feel like you're almost quoting Dan Martell's book, Buy Back Your Time. It's been one of my favorites this year, but it's this idea of, and I hadn't seen this. I did grow up with a pretty, kind of wild childhood, as it sounds like you probably did too. I mean, a lot, I didn't realize how many entrepreneurs, had some trauma growing up. Like but apparently there's a lot of us where that's just a thing. And as a result of that, and I saw this in myself so much, Alex, where as soon as I started building something that was successful, I would find some way to kind of almost like self sabotage it. I would find ways to like create chaos because I was addicted to that chaos, like adrenaline. And for me, again, almost exactly like you just said, it's been a real journey over the last couple of years to be able to detach from the need to either control everything or to break everything if it's working. And anyway, it's a lot less stressful way to live your life if you can get there, right?
Yeah, it's like you said, like everything's peaceful and calm. You're just like waiting for the other shoe to drop. Like, is this real? It's like when if you've only been in dysfunctional romantic relationships and then you're in a functional one, you're just like, something's off here. There must be something wrong.
Yeah, this could be good. Yeah, it's funny. Well, listen, we've put this off long enough. We do need to talk about sales tax here, Alex, because I know even though we are, geez, 5 years removed from Wayfair Supreme Court case, there was so much fear and panic in the e-commerce world in 2018, 2019. Thank God for firms like yours. Really, I don't know of any other firm, by the way, that does what you guys do as well as you do it. But like coming in and kind of creating clarity. We're getting nasty grams. We don't know how to respond. What does Nexus mean? Right? You guys kind of stepped in and solved that to where I feel like a lot of sellers feel like a lower level of adrenaline, kind of cortisol related to sales tax now. But I know there are some things that they need to have their eyes on that they're probably still ignoring. Like, what would be an area of sales tax that you're like, don't forget this. This is a thing you need to be aware of.
Well, I think it's safe to say that many businesses just need to consider the basics because there's still so many companies out there where they're only handling sales tax in their home state. If you're doing over $1 million a year, I mean, heck, if you're doing over $100,000 a year, you really should be checking in on what states you have sales tax and excess in and what your exposure is in those states at least once a year. I mean, it's really incredible the number of businesses we have showing up at our doorstep doing 5, 10, $15 million a year, and they only have a sales tax permit in their home state. So I'd say just starting with the basics and making sure that you're filing sales tax in all the states where you need to is a really great place. And if it turns out you have Nexus in a few states, but the exposure is really low, you don't really care, great. Just check in the next year and just make sure you have the eye on the ball. But the second thing that's a little bit more advanced that we're seeing come up in sales tax audits is use tax. And a lot of businesses really don't understand the difference between sales tax and use tax. So you might see sales tax companies say, we do sales and use tax. And it's so confusing, it's so convoluted because some states' sales tax for businesses based outside of the state is referred to as use tax, and that's not what we're talking about. It's like, can they make it any more complicated than this? Like, I'm sure they could, but it doesn't seem like it. But use tax is when a business doesn't pay sales tax on something, but they end up using it in their business operations. So let me give you an example. Let's say you're selling toilet paper online. I don't know, a subscription toilet paper business. I'm sure one exists. And let's say you're purchasing toilet paper for resale. Well, let's say you've got an office where you now are using that toilet paper in your own bathroom. Since you didn't pay sales tax on it, you need to pay the complementary use tax. Another great example of this is anytime you're purchasing software. So let's say you buy a $100,000 HubSpot software license, and your business is based in California, which doesn't tax SaaS, but then you've got employees all over the country, and in half of those states, they do tax software. Now you're supposed to self-report and self-remit that use tax, and the auditors will almost always find something, unless you work with tax filing, because we make sure that doesn't happen. But that's a trend we're seeing.
I love it. Yeah. So like audits, like whenever you hear the word audit, that's always like a pretty scary process. But like, I don't know. What are you and your team learning about audits or maybe avoiding audits or being prepared for them, weathering them? Like what is it the average? I'm thinking about this $4 or $5 million e-commerce brand owner. How much should audits be on the mind? And obviously, and I just want to say this is not Alex, this is Tyler. We send all of our clients to Tax Valet for their sales tax needs. I love what you do, Alex. I hate sales tax. I have a CPA do my own taxes, even on an income tax front. I love bookkeeping and I love fractional CFO and I know my lane and I stay in it. And you guys are the best sales tax firm out there. So if you guys need help, call him. You know, they do a really good job. But like when it comes to audits, like what is it that should have the attention of brands? Is there any hacks or anything they should be doing to make sure they're safe?
Yeah, that's a great question. I just want to say I hate sales tax too. I probably hate it more than anyone on this planet. And that I think is what makes us really good at sales tax, because I know how frustrating it is. And like all of our systems and processes are designed to eliminate as much frustration for the client, but then also for us as well. So people always get a little bit surprised when they're like, I hate sales tax. I'm like, me too. I really, really hate it. Uh, but to answer your question about audits, let's see. I think one of the things I want to say is that audits can happen to anyone and everyone, and there doesn't necessarily need to be a reason. And I think that many businesses assume that if they're being audited, they did something wrong, and that's just not the case. I mean, geez, Tax Valet got a sales tax audit from Colorado. This was like 6 months ago, and we were like, "You are wasting your time. We are a sales tax company. You really think you're going to find exposure? Go ahead." They learn pretty quick. Uh, but audits can happen to anyone. That's one thing. The second question we get so often from businesses is, well, if I register for a sales tax permit, that means I'm on the state's radar, and that means that my chances of being audited periodically by the state go up. Is that true? I'd say kind of technically, yeah, because the states will have two different audit outreach arms. The first is going to be for businesses that don't have permits. And the second is going to be for businesses that already have a sales tax permit, but then it's just like a routine kind of random audit to make sure they're doing the correct thing, right? So is it true if you get a permit, you're now in their rotation every X number of years to be audited, or maybe never? It could just be random, right? And it could never happen. Yeah, that's true. But I also would say, if you have Nexus in a state, do you really, really think putting it off another 10 years or however long you're planning on doing it is going to help your problem, when you consider that sales tax liabilities fall to the personal responsibility of the owners or officers, and they can and they will come and get funds from your personal bank account if they make an assessment and you don't have enough money in your business account? Yeah. Well, they put liens on your business property. Yeah. Well, can they put liens on your personal property? Yeah, they can. And I'm not saying this to scare people as much as just to paint the picture that putting this off and just ignoring the problem is not going to go away. Because let's say you get lucky, for example, and you decide not to register and you never get audited. What if you're planning on selling your business? Savvy buyers are now looking at sales tax exposure, and it doesn't matter if you're doing an asset purchase agreement or an equity deal, the liabilities can still transfer over to the new owner. And so a lot of buyers are reviewing sales tax liabilities. So if you're ever planning on exiting your business, unless you're planning on being extremely, extremely lucky, you just need to incorporate this. And I'm not saying that Taxfully is going to be the right answer for you. Maybe it is using software, maybe it's using your bookkeeper, but for the love of God, please just make sure that you're looking at it occasionally, because I don't want people to unnecessarily be in pain. Like I hate sales tax. It's a regressive tax. It disproportionately impacts the poor. It's overly complex and burdensome. Like I can talk about that all day, and you can disagree with the tax as much as possible. I disagree with all sorts of taxes, but I don't pay the tax because am a great American and I just love paying for government wasteful activities. I'm doing it because I want to avoid all of the pain that's very likely going to happen in the event of an audit. That was a lot of words.
No, but that was really well said. I think that's right. You don't have to philosophically love a tax to want to have the peace of mind of knowing that you're covering your backside well. And there are some companies that want to take a really like aggressive, like, I'm going to fight the man. My political stance is going to be this isn't constitutional. And my thought on that, I'm sure you would agree on this, is I don't want to be that guy that spends the rest of my career fighting the legal system to try to be right. I don't need to be right about that unless this needs to be a big ass pile of money for me to need to spend all of my available resources to try to be right. And I want somebody else to do it. I hate to say this is a pure collective action problem. I want you to do that. I want you to go fight that battle, but I don't have time and energy to go fight the government on whether they have jurisdiction to tax me.
Well, look, I'm right there with you. And we also have a client that was that guy that said, we are going to fight the man, and that's Halstead Beed. Wonderful, wonderful company. And they went out and they basically sued the state of Louisiana for having an extremely burdensome sales tax system with all of their home parishes. And we supported them. We wrote an amicus brief to the, I think it was Ninth Circuit, Eighth Circuit Court of Appeals. It was like 40 pages, and it was working its way up to the Supreme Court. And basically, their argument was that this tax system is so complex that it is a burden on interstate commerce, and we are purposefully not making sales into Louisiana so we do not cross the economic nexus thresholds because of all of the really undue burden of setting up our systems to comply. And it ultimately recently here got struck down by the Ninth Circuit. We disagree with the court's opinion. Louisiana also tweaked and changed their laws a whole bunch over the past few years, and they said this has nothing to do with Halstead Beed, which we don't believe at all. But here's the thing: it's so easy to say, like, I'm just going to wait for the Online Merchants Guild or some other body, but really, one person can have a huge, huge difference. And Halstead Beed was supported by a whole bunch of these nonprofits, and they really didn't pay too much for legal fees, I don't think, if any, because they were backed by all of these taxpayer organizations.
Wow. Okay, so when we think about like the start dates related to sales tax, I think the phrase you used was the permit start dates.
Mm-hmm.
Correct me if I'm wrong, but is this the question? Because this is maybe one of the most common questions I get is like, when there's kind of a when question, like, when do I register in a state? When do I need to start filing? And then within that, when should I say that my start date was? Like, is that what
Yeah.
the essence of this point is? Can you kind of demystify this for us a little bit?
Yeah. So, just for some context, oftentimes the case is that a business will So oftentimes what's happening is a business will have sales tax nexus long before they realize it. So maybe they hired an employee in a state, or they crossed the economic nexus threshold back in, like, I don't know, 2020, and they're just now finding out in 2023. So the question that they're asking themselves is, well, what happens if I put that 2020 date on my permit start date? And the answer is they're going to come back to you and expect all of that past due tax plus
Mm,
penalties and interest. And there are options like voluntary disclosure agreements in order to get the penalties and interest all or partially waived. But many businesses will look at that problem and say, I'd much rather take my chances and just put the present day as when I cross sales tax nexus and begin collecting or remitting moving forward. And there's a risk associated with this, right? And we always advise our clients, like, we are formally advising you to use your permit start date as being when you first cross Nexus. And my hands are kind of tied on that. Like, I can't put in writing, I can't advise you to do something that would be breaking the law, because it would be a felony to knowingly lie on these forms. And, like, I can't put my employees' careers at risk. I can't put my business at risk, because what happens if you get audited and you say I advise you to, and then you could sue me, and, like, I just can't, right? That being said, we do paint a very clear picture over, like, here's how much money we're talking, here are the audit percentages that we're seeing, this is a high risk state, this is a low risk state, just based on what we're seeing. So we're never going to make the decision for our clients, but we are going to add all of the information so they can make the most informed decisions. One of the trends that we are seeing, though, is that more states are starting to question your permit start date if you're putting it as like a present day, because they'll say, oh, that's really convenient that you just had Nexus today. And so Arizona and Wisconsin are two states where pretty much they're asking everyone to sign an additional form confirming that you legitimately cross Nexus on that day. And then if they do audit you and they do find out that you had Nexus in the past, they're going to throw the book at you. And there is an unlimited liability in terms of looking at past transactions if you knowingly, purposefully lied on a form. And they can really, really come after you, and it's a bad idea. So this is why working with a consultant, you're just going to be getting so much more out of it because they see all the states, they see all the trends, and they know what states are doing what and where is it an exceptionally bad idea? It's always a bad idea, I think, to lie to the government about stuff, but where is it an exceptionally bad and stupid idea?
Yeah, because I think that's what you're trying to paint is like there's always this, because it is so difficult to keep up with the different Nexus rules in each state. There's always a little bit of a tension between, my cost of compliance is higher than my liability, so I'm not asking Alex for his advice here, but I might choose to self-insure when my cost of compliance is going to be higher. But at some point,
Right.
there's a little bit of a gray noodling over to where at this point I clearly have some exposure and I need to do things right. And then, yeah, boy, it's just I love the fact that your firm could come in and say, okay, listen, with Colorado and Massachusetts or whatever these other states are, you don't want to mess with those guys. And here's the challenge you're going to have. Your risk profile is going to be higher. Yeah, I mean, I guess that's the real challenge with this is that it is such a burdensome system that you are tempted as an entrepreneur, the kind of entrepreneur who would break things and build something. You're tempted to say, state of Georgia, how good are they at enforcing these laws? And I don't know. I mean, like how do you help your entrepreneurs like kind of view that decision matrix in a way that just helps them make good decisions instead of being surprised by things as they continue to grow?
Yeah, it's a great question. I mean, we're really looking at two or three factors. First, we're looking at what is the exposure the business has in that state, in the states where they have Nexus. And then if we look out over the next 1, 2, 3 years, what is the potential total exposure under audit plus penalties and interest if they were to be caught, if they were to be found out? Because if you have $40 to Kansas, but 40,000 to California, the answer is pretty clear. But it gets a little bit more murky if it's like $2,000, $5,000, $10,000. And every entrepreneur's risk profile is going to be totally different. We have some clients that say, I know I'm going to be selling my business someday. I don't want this to haunt me. Just take care of it. I don't care if it's 10 cents. We have other entrepreneurs that say, the states can come and try to fine me. I don't care unless I owe over 10 grand. Where are you going to fall in that spectrum? It really just depends. So that's the first thing we look at. The second is what are we seeing with that state in terms of them examining permit start dates? Because if a state is not examining a permit start date, that is a consideration. Um, Another thing is how frequently does that state audit businesses at all? And that's something that we have data for that really livens up the conversation because we know which states are high audit risk states, which, by the way, is Illinois right now. Illinois is the king of 2023 for sales tax audits. Don't mess around and find out, so they say.
Actually, I was going to ask you. I was like, I wonder who the bad guy is this year. Sounds like Illinois is king of the hill right now in terms of auditing their folks. Interesting. Which, by the way, this might have been a client that you and I had in common a few years ago. And I remember a Chicago-based $9 million a year e-commerce seller calling me and having the question related to. So I've never filed for sales tax, but I got these three nasty grams from the state of Illinois. What do I do? And I remember specifically being like, what you do is you call Alex because I have no idea. Sounds like you probably need some support. But anything else related to sales tax or what's currently happening in the sales tax world that the average, $1 to $10 million seller ought to be aware of?
Yeah, so we've been tracking sales tax audit rates for actually ever since we started the company. In 2018, 2019, it was pretty average in terms of about 1% of our clients being under audit per year, right? That plummeted in 2020, 2021 because of COVID, because it is particularly bad marketing for politicians for COVID to be happening and then to be going after the businesses. It's just a bad look. And so we saw that go down to about 0.5% for 2020 and 2021. For 2022, we saw it go back up to 1%, so about 1% of our clients at any given time being under audit.
Mm.
But we have seen that jump up quite a bit in 2023 to 3.5%. Right? So that is about 140%. Just in the past 4 months, we've seen 140% increase. And based on conversations with other sales tax companies, they're seeing the same sort of trend. And we knew that this was coming for a variety of reasons. We knew it was coming because with some states, they're very public about how many auditors they're hiring, like Texas. And Texas, I think, more than doubled their audit department. We also just knew that states were running out of money because of COVID and sending out all the stimulus checks and dealing with unemployment and everything else happened because of COVID. And now it's time to collect revenue. And
Yeah.
so is it going to continue? Are we going to see more audits beyond uh, that 3.5%? I don't know. Time will only tell. I hope it doesn't increase, but businesses should just know that if you're experiencing an increase in audits, it doesn't mean you did anything wrong. It's
Yeah.
just happening with more frequency because there were more auditors hired and they're measured based on the ROI that they're bringing to the government.
So just got out of curiosity, you may not even know this, but like out of every 100 audits that say Illinois does, how many of those are going to be businesses that are actually based in the state of Illinois versus some of our sellers that are filing from it? Do you have any idea about whether there's a skewing of the audit percentage from our native brethren versus the guys that live in other states that aren't our voters? I was just curious about that.
Yeah, it's a great question. I mean, technically, it would be unconstitutional to systematically go after only out-of-state businesses compared to in-state. This would be a direct violation of the Commerce Clause. That being said, I know for a fact that states will look at those two groups differently, not because they're trying to like stick it to the out-of-state businesses. I don't really think that's the case. It's just because of technicalities. But it's very state dependent, right? Like Arizona, for example, questioning out of state economic nexus thresholds on that permit start date is going to lead to more audits from out of state businesses. We are seeing right now, though, with that uptick in audits, those being predominantly in state audits. And when you get an in-state audit, it's very likely that they're not just going to be looking at sales tax or use tax. They're also going to be looking at income tax or property tax or other forms of taxes. Um, are we going to be seeing more out-of-state audits? I think so, yes, just because it's unreasonable to expect that you only get audited by your home state. And the states know that there is a lot of money to be had by auditing out-of-state businesses. The challenge for them, though, is how do we find them? So a lot of states have audited Amazon FBA warehouses because they know they have Nexus, all of that juicy FBA data. But beyond that, it's kind of trickier. They're just going to start Google searching and saying, this looks like a big business. Let me just call them. On that note, we've got a downloadable resource on our site called the 10 Sneaky Tricks that Sales Tax Auditors Use to Find You. It's in the resource section. Could be
Oh,
some interesting late night reading.
yeah, you have a hard time getting to sleep. But it's funny we laugh about that, but that's probably one that you guys need to go find on the taxvalet.com and read because I think understanding the way the auditor thinks is important. I mean, you made the comment, Alex, that it's not politically expedient to audit businesses during a global pandemic.
Probably
And
not.
yet, the flip side of this, that was actually very much true back in 2018 and is still true now. And this is probably the reason that we've seen audit rates triple, is it is very politically expedient to not levy a new tax, but collect revenue for your state.
Mhm.
Meaning, as long as they can find positive ROI, hey, this is ROP. I'm not talking about the government, but those guys are looking for ROI as well. If they can find positive ROI ways to go after existing businesses and collect that revenue, it just seems like that is very politically expedient. As a result, being very uneducated in the space, would be surprised if we don't continue to see audits on the rise. So let's have our ducks in a row.
Yeah, for sure. There's one last trend that I want to mention here briefly that we're seeing in the sales tax space, which has to do with the kind of clients that we're seeing as a sales tax service provider show up at our doorstep. And it's been so problematic that we've actually had to like redesign some of our systems and how we account for our own capacity. And that is, we are seeing a trend of businesses coming to us that were using software like Avalara, TaxStar, for example. They tried to do it themselves. Something got massively screwed up, and now they're coming to us for help. So it used to be that the vast majority of businesses showing up didn't have any sales tax solution put in place at all. And now we're seeing all the repercussions of companies that were doing it themselves, realizing, oh my God, this is a big disaster nightmare situation. Doesn't happen to everyone, but when it's bad, it is bad. And then we're being called in to clean up the mess. And the thing is, we don't charge extra to take on a client and onboard them and fix all the issues. So we actually have a limitation in the number of cleanup projects we can do each month because it takes an average of 2.5 times more work. But it's all the same sort of stuff, right? There's data issues, there's tax calculation issues, there's product taxability issues, there's return issues. A huge issue that we're seeing with sales tax software companies is them doing the nexus review and then registering for your permits, and then you have like twice as many permits than you actually need, right?
Mm.
But then once when you register for a permit, you're responsible for that tax even if you didn't originally owe it. I mean, we have one client, this is at the beginning of the year, their software company was supposed to be collecting hundreds of thousands of dollars in tax a month, and about half the states it wasn't functioning correctly. They're on the hook for several $1,000,000. They're a big name brand, so I'm not going to say who they are. But when things go wrong, it's not going to be everyone, because for most companies, like, you set it up, it works. But the thing is, when it doesn't work, you don't get like a oops, I'm sorry button with the states. They want their money.
And that is tough because, like, I remember, I may have even been talking to you a few years ago, but I remember hearing, the one thing you really don't want to do is collect sales tax and then not remit it, right? That's the like felony side of
Mhm.
this. Hey, if you're collecting, make sure you're remitting it. But the other side of it is, hey, if it turns out that you have liability, you don't get to go back to those customers and now collect it. Like, that business happened 2 years ago. You're going to just kind of have to pony up for those
Good
taxes, right?
luck.
Even though you didn't collect it. Yeah. Yeah. Right. Yeah. Just by the way, if you're wondering, yes, you sold me that widget 3 years ago. Come to me. I'm not going to pay you the sales tax 3 years later. I'm sorry. I don't feel good about saying that, but it's just, you and I would be the same way there, right? We're not going to do that. You're not going
Yeah.
to. So just be aware of that. Okay, so I want to pivot our conversation here. Like, this is valuable stuff, guys. Go to thetaxvalet.com. Check it out. Resources. Did I get that website right? Is that right?
Yeah. Yeah,
Yeah.
yeah. We also own taxvalet.com now, finally, but because of our SEO, we don't want to actually update it and remove so kind of funny story with that one.
I could totally see that. It's really funny. So type in any taxvalet.com or the tax valet, and you're going to find Alex. I think for really simple businesses, you can try to self-insure, but at some point you're going to need to get really serious about this, and you can try to use softwares to automate it. But here's what I found about any automation: anything that you automate still has to be managed. And so if you don't have the internal capacity to manage that automation well, you may want to consider bringing on a consulting firm like Alex's to make sure that you can completely delete sales tax from your RAM and really focus on the things that give you meaning and significance, which is a pivot into what I want to talk to you about next, Alex. So I was reading an article that you wrote some time back here about pivoting your company, pivoting Tax Valet into becoming what's called a B corporation, where there's kind of this idea of being more socially responsible, doing great while doing good things, right? That kind of thing. Would you just give me a little bit of, like, how has that journey been? Have parts of it been hard? What have you learned, like, just through this B Corp kind of saga? You've kind of been in the middle of it for a while here, right?
Yeah. I think probably the last 6 months. I mean, for those listeners who don't know, a B Corporation is a private certification from B Lab, and it's it has various requirements for different areas of your business, say on environmental impact, employee relations, governance, sustainability, community impact, things like that, right? And there are, I think, like 8 different categories, and there's a total possible of 200 points that you can get from B Lab. And to qualify for a B Corporation, you have to have, I think it's 60 points. And that might sound, oh, that's really easy, 60 out of 200. Let me tell you, like every single point that you're getting, you really, really have to fight for.
Oh,
Uh,
wow.
but we've always been a fairly progressive company in terms of our business operations. And so when we started, I think we started at like 57 or something like that. And so at this point, based on our own internal audit of how we're doing, we should be at about 80 something points. But it's been a big process for us to go through and just make sure everything is documented, all of our ducks are in a row, because the B Lab auditors are actually going through our company here now over the next few months to make sure that everything we say that we're doing, we're actually doing. And we'll be in pretty good company. I mean, we'll be with companies like Patagonia, Ben and Jerry's, Seventh Generation, and these are companies that are profitable. They're not nonprofits; they're profitable, but are leaving the world a better place just simply by existing. And that's what the B Corporation movement really is about.
Love it. I think that's pretty strong, man. Strong effort. I'm proud of you for getting that done. That's great. Well, I end every episode with my guest Alex, just as a guy that wants to get better at running my own life, habits, hacks, practices. Hey, this is a guaranteed return on this podcast. You listen to this, guys. We're giving you ROI on the ROP. Here's how we guarantee that. Is I'm going to ask Alex. I mean, what is it? What is it that you do, Alex, regularly that gives you an unfair advantage or an unusual ROI for the energy you put into it?
It's such a great question. And I'd really say it's not just one thing, but it's a collection of things. So I've got something that I call my cadences. And so I have all sorts of cadences, which are routine, systematized processes for my work and personal life. So, like, for example, I've got my spreadsheet up here. I've got my date night cadence so that my partner and I are going out on a date every single week. I've got my business social media cadence. I have my doctor and healthcare cadence. I've got my company rock or quarterly goal check-in cadence to make sure everything's being entered and updated by all the employees. So long story short is I've got all of these things that I've built up over the years that happen on a periodic basis. Sometimes they're once a week, sometimes they're once a month, and everything in that is systematized and documented. And my personal assistant, who's freaking incredible, manages it for me. And so each Monday we check in and say, okay, what's the priority for this week? Where are we with these cadences? What action items? She'll have, like, I've got these 3 ideas for date night with your partner. Which one do you want to pick? And so really just systematizing the shit out of this has helped so much. If you do it more than once, it can be systematized.
Well, and I love that. I love that was one of the big nuggets from James Clear's Atomic Habits is that, like, hey, could you somehow engineer the environment or the process to make failure literally impossible, right?
Mhm.
Would it be possible for you to, like, and sometimes it's little hacks like put your gym clothes next to your whatever when you're leaving in the morning. So you're like, ah, crap, I guess I better bring them with me. Like, whatever, that kind of hack. Or for me, the one that's really changed my life over the last 2 years is just developing a journaling habit. And the only thing I changed was to put a journal on the chair where I drink my coffee every morning. And lo and behold, ta-da, I'm doing it, and it's having an impact on my life. So I love that. The idea of don't be afraid to engineer systems and processes that make success almost inevitable for you.
Automatic.
Yeah, that's awesome. Alex Oxford, the founder of the Tax Valet, taxvalet.com. Really, really great to have you today. Thank you, Alex. Hey, let me ask you one more question because I think this is obvious, but I forgot to ask it, and I want to make sure we grab this. If somebody's listening to this episode or maybe watching on YouTube, what is the pain or emotion that they're experiencing this week that would say, it's time. You probably need to reach out to Alex's team there at Tax Valet and get some attention on the sales tax front.
Confusion, anxiety, not knowing. If you don't know, that's not a great sign. Or if you know that you're not doing it correctly and you're maybe procrastinating, we can help. I mean, we look at sales tax as not just being a risk problem, not just being a tax problem, but also an emotional problem, and we'll take care of it for you.
Awesome. Well, if that is you, if you heard that and you're like, oh man, I've been ignoring almost all of this interview, but he nailed it. That's exactly where I am. Then reach out to the tax valet team. They're going to help you out, get you straightened out. Alex has been great. Thank you so much for joining the podcast today. Really grateful for your time.
Thank you, Tyler. I had so much fun.
All right. And for those of you guys who have made it, this 48 minutes in this interview, I just want to say thank you. Alex and I value your time. We hope you grab some nuggets, something that's meaningful for your life or for your business. And, hey guys, until we see you next time, just say, go kill it. Remember to engineer your processes so that success is inevitable. Thanks again for joining the Return On Podcast.